Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Picture International with me, Darius, because today is the 6th of June, 2023. So, 0606. So, welcome, everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest and then we can continue. Okay, so now then, let me just adjust this camera a little bit. There we go. So guys, I hope you all had a wonderful Monday yesterday. So we didn't have a session yesterday, so we are resuming today. Now, before we go further, as always, we're gonna have a look at the charts, and the drill. But before we go further, just a quick reminder of our Easy Markets website, which you can always check out for more information about us. And I believe you can find some useful information here, guys. So let's, without further ado, let's jump into the charts. The first one I want to pick up here is Nikkei 225. So looking at the picture here, you can see that after we broke the downside line. Oh, and by the way, I'm picking up on the instruments that I looked at on Friday just to see how everything played out. We had quite a big of a gap, so just I think that since Friday's analysis we did see some shifts in the charts and in my lines and arrows, but we'll get to that point. So I can see there in the chat room CP T Zach 77. Good morning to you too. Good morning to everybody else as well who's joining in. So I hope you're all having a wonderful start of Tuesday. So like I said, coming back to Nikkei, a fantastic rally here after we broke the downside line. I talked about this. I said that basically what I meant was that if we break the downside line, I will aim only for here, for this territory in between the 31,458 and 670 levels. Now, we got that move tick, and then I said that if we clear this barrier, the 31,670, this will confirm a forthcoming higher high and potentially could attract more buyers into the game. Well, look at this. I mean, we went further north, and to be honest, well, I didn't have a level anywhere here, but actually, well, it reached this kind of the end of my arrow here. Okay, what can we do here right now? First of all, let me mark this highest point of the current highest point of June around here near the 32,573. That's going to be our new barrier for the upside. So and of course the question is, will this continue rallying? Okay, look, this is a bit of a difficult one. I mean, the positivity that we're seeing here right now in Nikkei is mainly because we're having a bit of a down move in the Japanese yen. Now, that declined, Japanese yen declined against some of its major counterparts, this way making Japanese exports a little bit more attractive, and that's why we are seeing Nikkei pushing nicely to the upside. Also, the whole thing about interest rates. Okay, in terms of interest rates, I'll get to ASX in a bit right now. But in terms of Nikkei, look, for now, I think that the Nikkei will be keeping an eye on the US and what's happening there. So far, the expectation for a rate hike in the US is sitting at this level, so there's no expectation for a rate hike during this meeting, during the 14th of June meeting. Currently, we're sitting at 74%, roughly around here. Look, I said it before. It might be a bit of a roller coaster ride here, and to be honest, we're really curious to see if this is gonna go back a little bit. Before the 14th of June, will this go back to around 50 or something like that? It doesn't need much. It just needs some sort of crazy news or something like that coming out. At the moment, the data that came out last week and job numbers, those were spectacular. Okay, NFPs grew significantly, but the unemployment increased. So that's where the little trade-off is kind of. Yes, NFPs rose, but the market saw the positivity. I'll get to the US indices in a bit as well. And yep, we saw Nikkei also jumping nicely here because again, it was less Japanese yen buying, more better for Nikkei here, better for the Japanese companies. However, look, we've reached this barrier, this 32,573. To be honest, in a way, if you want to go further north, then I think that it's better to wait for a push above this 32,573 territory and then go higher. Until then, don't be surprised, for example, if suddenly this starts moving sideways. Maybe it even declines a little bit here. So we do have this steep upside line that we can draw from the low of the 11th of May. Very steep, I would say. And of course, whenever it's steep like that, then we're hoping maybe for a break of it. However, given that we have a bit of territory here, so don't be surprised, for example, if we do move kind of sideways, let's say here, if we struggle with the 32,573 territory, with the current highest point of June. And also, some of you might, think that, hey, maybe if it wasn't sell in May, go away, maybe sell in June, go away. So, look, I think that in general, the market will be taking some profits. We did have a good rally, and the fact that we're going closer to that interest rate decision, which is next week, that might keep the buyers kind of a little bit on the moderate side. Again, this is where I will contradict myself a little bit right now, because if everybody knows that, let's say, there is potentially an idea that a good chance, for example, if suddenly this starts pushing back down, and basically there is a good chance that we could see a rate hike next week, then maybe the market participants will just enjoy the moment, keep on pushing higher, and then let's say we could see that market getting brought down going into next week. But again, this is just a theory. For now, the only ways, I think, that just be careful and cautious. Look, if you've missed some rallies, I think that if you've missed some rallies to the upside, I think that maybe it's better to maybe wait this one out. Look, there is, of course, potential for some upside, but given that we already had quite a decent up move, maybe a bit of a retracement at some point could be possible. So this is what I'm considering, but again, with very, very big cautiousness. ASX 200, talk about interest rate decisions and talk about interest rate hikes. RBA goes further and hikes the rate. And you can see it brought the ASX 200 heavily to the downside. And look at this beauty. Okay, last week I talked about this little hurdle, this 7,200. And I said that if we jump above it and stay above it, then yes, I will consider a move towards this downside line taken from the high of the 17th of April only. We fell back below the 7,200 zone. And yeah, we've ended up reaching this territory, the 7,131 zone, approximately around here. I've marked this level previously as a good area of support. Look, I think that what I'm going to do here is I'm going to take a very conservative approach here in terms of aiming further south. And if we do drop and stay below the 7,131 territory right here, I will aim for this zone, which I've aimed for before. This zone is between the 7,064 and 76 levels. It acted as a fantastic area of support, so let's see if we can get a somewhat of a rebound from this one. But again, first, of course, we would need to get there. But in order to consider that, I need to see, like I said, I need to see a nice good drop, and I would like to see the body of the daily candle staying below that 7,131 zone. China, the FTSE China 50 index. So, again, so far so good. Look, after we rebounded from this 12,237 territory, we moved higher. We found resistance again near this key area of of resistance, basically near this 12,000 kind of 600 territory. I spoke about that level previously. That was my area of support before. Let me just actually put this one on the chart. I think it's a good level to watch. Let's continue monitoring it. And if we do break that one, good. Look, we could get closer to this downside line. However, if we start, let's say, moving a little bit sideways here, and we get closer to this downside line, but we'll still be below the 12,600 territory, then yes, maybe this could all line up nicely, and the stars could line up nicely, and we could see that breakout through this downside line, through this barrier, and we could see a bit of a move to the upside. Now, initially, of course, I'll aim for the 50-day EMA, then the 100, and the 200-day EMA. Simple as that. These are the footsteps that I'm going to follow. For the downside, very conservative approach, and drop below the 12,237 territory is needed. Nasdaq. So yes, the US indices. Okay, look, I talked about this previously, right? And I said to you that, look, I'm watching this wide this area. I'm watching this Fibonacci here, drawn from the highest point of November of 2021 to the lowest point of October of 2022. We cleared the 61.8. Now the question is, can we go further north? Well, so far we are, and so far it looks quite good, I would say. I would even say Nasdaq actually is a little bit on the modest side, actually, but in comparison to the S&P and the Dow, especially. But look, so far this is working out. What I talked about previously was that if we do pop above this 14,450 territory, I'll go a little bit to the upside. 14,642 could be my next target. And then maybe the 14,725 area here. So far, I'm kind of aiming for that zone, although, as I said, my skepticism is rising in terms of further upside. But look, what we can do here is basically, if you're a little bit on the careful side, and look, we do have these quite important barriers here. By the way, this one here, let's say the 14,642 right here, is the high of the 8th of April of 2022. This level here, the 14,725, is the inside swing low of the 1st of April of 2022. So actually, I'm kind of loving this 14,725 level a little bit more. And that's why I'm still kind of aiming for it. But as you can see here, my further upside scenario is from that level. So that's why I want to see first if we can get a reach of that. And again, as I said to you right now, and when I was covering Nikkei, that because of this right here, the expectation right now is, yes, for a no rate hike. Maybe this could weigh in, and maybe we could see some, let's say, some further advances going before the meeting, and maybe there could be I'm not talking about crazy moves to the upside, although I'm not excluding those, but I'm just saying that maybe it could still be a gradual move higher. However, if suddenly we will start hearing talks about that, oh, the market is a little bit way too, inflated, and we need to bring it down a little bit, that's where, maybe the Fed could follow the footsteps of the RBA, and we could see an unexpected increase here in the interest rate. Look, the RBA today, when it came out, the expectation was for the rate to stay the same at 3.85, but it came out with an extra 25 basis point increase, and there we go. Congratulations, back to 4. Well, not back, but up to 4.1 now. Look, I think that this is where the issue is, that there is a question that is actually the U.S. Didn't it not went way too high straight away? Maybe. Now, given that inflation is slowly declining, maybe it's enough of rate hikes. So in a way, that's why this here could stay as it is. You know, this is one of the theories basically. So that because inflation is already kind of going slowly to the downside, you know, maybe it's enough of rate hikes right now. And you know, maybe we'll see only like just kind of zero increases for a while. However, depending on how they're gonna decide to do with the stock market, if that one continues to rally, honestly, I think that this may kind of not sparkle with the Fed, I would say, and you know, it may they may try to just kind of, you know, increase the rate to bring the market a little bit down, because the fear that the inflation will later on catch up again. You know, that's where they want to be maybe one step ahead. However, again, like I said, it's a very itchy subject because, again, ECB, you know, has slightly lower rates and in the higher inflation. So, you know, go figure. That's why for now, look, long story short, I will say this way. At this point, I am, like I said, keeping an eye on some of the levels in order to go to the downside. I would like to see a drop below maybe that 61.8% retracement on the Fibonacci, which is roughly around that 14,367. And then we could consider maybe a larger correction here to the downside. S&P 500. So, okay. Is it a bullish flag? Could be. We had a nice boost here on Friday when numbers came out. So yep, we jumped through that 42 territory. I spoke about that on Friday in my morning video. I said that I need to see a pop above it in order to go higher. I got that pop. Great. What's next? Well, my next target is the 4,327, and that's the highest point of August of 2022. So, will we get that test of that area? Well, hope so, because again, it's quite interesting to see how this is going to play out. Because at the moment, the technical picture here is something of a of higher highs and higher lows. Also, we're forming a nice bullish flag here, but I have to say that updated. I have to say that look, I'm still very careful, and I think I'm gonna redraw a few highlighted zones right here. So this here has to go. I'm gonna mark this hurdle. I really like it, the 42 zone. If we start falling back below it, then yes, I will consider a bit of a retracement here towards the 50-day EMA, and then yeah, we will go from there basically. So long story short, if you want to go further north, guys, there is a good chance for that one to happen, especially if we, you know, see this as a nice bullish flag. However, if it starts retracing lower and then suddenly falls below that 42 zone, I will consider a larger correction to the downside. The reason why I'm saying correction, because we're still a bunch above a bunch of upside lines here. One of them could be this, and the other one could be that right there. And yes, then we'll see. If we can clear those or not. This steeper one right now, taken from the low of the 13th of March, is nicely coinciding with the 50-day EMA. So that's why it's becoming a little bit more attractive. But yeah, first, like I said, for me to consider the downside, a drop below that 42 territory would be needed. The Dow Jones Industrial Average looking good. After we broke my downside line, I said to you that if we also clear all these EMAs, then we'll go higher. My next target is going to be the 33,850. Well, perfect hit, perfect touch, and you can see a perfect correction to the downside. If we continue to trade above the 50-day EMA, or in general the 50 and the 100-day EMAs, then yep, there is still a chance to reverse back to the upside and move north. Now, in terms of the downside, now previously, look, I think a few adjustments have to be made on this one. Look, this upside line. Okay, I would like to get rid of it, but maybe actually I'm going to keep it for now. What I'm going to do here instead, in terms of considering some downside moves, I think a drop below that 33,308 territory could be great, but I will start looking at some lower levels already for after if we do drop below the 50 and the 100-day EMA right there. And then, yes, we could go from there. Now, jumping into the German index, DAX. Look, for now, it's stuck. It's stuck in this range. I talked about this previously, and I said I was so happy then when we saw that push higher. Then we reversed, after we've hit the 16,000 kind of 374 territory right here. We started reversing back to the downside. We moved lower. And then we fell below that 15,800 zone, but the 15,700 territory provided fantastic support, and from where we rebounded, pushed back inside this previous range. Now, although the sides of this previous range got violated, I think that it's still okay to keep that on the chart, to be honest, because looking at the picture here, I mean, yeah, I mean, it's a little bit tricky. Look, I'll refresh everybody's memory on what I said last week and before that about the idea, a possible idea of maybe something of a complex head and shoulders pattern here. So we have the kind of the left shoulders, plural, and we have one head, and then maybe we're forming some more right shoulders right now, and that's where maybe later on we could see that drip to the downside. And look, for now, I think that while we're stuck in here in this range, I'm just observing the price action. Of course, if it starts popping above the 16,063 territory, then yes, maybe we could consider the second head, but again, we'll have to just go from there. So, look, what I'm considering now, as I said before, if I want to go lower, 15,800 territory, that's what I'm looking at. If we get a drop below it, then yes, I'll aim for the 15,700 zone. If we clear that one, then that's where more sellers could join in, and we could start aiming for the 100-day EMA or even maybe the 200-day EMA. The FTSE 100, and this one made a nice move here to the upside towards that 61.8% retracement on the Fibonacci right here. It came very close to that, and then we retraced back down. We found resistance near the 50-day. Oh, sorry, the 50% retracement on the Fibonacci right here. This Fibonacci is drawn from the high of the 23rd of May to the low of the 31st of May. So yeah, we did get that, like I said, nice move here. The 50% Fibonacci held nicely. We retraced back down, and now it's the 23 that's holding. So if you're looking for some downside in the near term, then yes, a drop below that 38.2. Sorry, not the 23.6, but the 38.2. Yes, this area right here could be ideal. So a drop below the 38.2. Territory here on the Fibonacci could open the door towards that 23.6 or even lower. So for now, I'm just gonna stick to that. If we do fall below this, I'll go lower. For the upside, well, I would like to see a push above that 50% again, and in order to go to the upside. So that's going to be my game plan for some higher levels. And then I will aim not only for the 61.8 actually, but also for the 7,687 territory, which is marked near the lows of 4th and 11th of May, but also it's kind of coinciding nicely with the 100-day EMA. So that's going to be my next target. But let's, of course, not to forget to mention the overall picture. Overall, we're stuck. We're stuck between the upside line right here, this upside line taken from the low of the 13th of October, and the downside line taken from the high of the 21st of April. So yeah, that's my game plan for now. Like I said, for the short term, let's see which way we're gonna break out. Now then, the dollar index. So this one's a little bit of a mess, and I think it's time for me to remove all the drawings and just kind of have a fresh start because I think it's getting confusing. So one thing for sure, what I'm going to do here is I'm going to mark some levels. First of all, the highest point of May, near the 104.61. So that's going to be an important barrier to overcome if you want to go higher. So if we do push above the 104.61, my next target is the highest point of March of this year, and then that's near the 105.87. So that's, I think, by the way, yeah, that's the highest point of this year, by the way, as well. So if we do clear that one, then we will confirm a new high for the year. But before we can go there, let's see if we can clear this 104.61 territory. For the downside, well, for the downside, I would like to see a drop somewhere below this 103.3940 zone, approximately around here, guys. It doesn't really mark neither of the highs or the lows. No, it's just acting as a good area of support and resistance, or it acted as a good area of resistance before. Now it seems to be taking the role of support. Now, if we do clear that one, my next target is the 100 and the 50-day EMAs. After that, if we do fall below this hurdle, below that 103.95, 103 point, well, let's round it up here towards the 40 zone, actually, 103.40. If we do fall below it, yes, as I said, my next target is the 100-day EMA, and then the 50. And then maybe I'll start considering some of these levels here slowly, without any rush, and then we'll go from there. So yeah, that's my game plan for now. Jumping into gold, look, a beautiful bounce from this upside line. Okay, this is quite interesting. So on Friday, we fell heavily. Yeah, well, we fell heavily because we had a fantastic move here on the US dollar, and that strengthened, and that brought gold back down. We tested this upside line again together with the 100-day EMA, and yeah, we rebounded again. So look, I think it's time for me to remove a few things here. I'll use this line arrow later on, but look, again, the same problem here. This territory here, this 1936-37 zone, is providing a bit of a support, and I would say actually not only that level, but also around here. So basically, I would say that this area between the 1937 and 1939, yep, is quite an important one to watch. I think that's what I'm gonna do. If I want to go lower, this is the territory that I'm gonna be watching carefully. If we do clear it, yes, this will confirm a forthcoming lower low and potentially could attract more buyers into the game. Now, in terms of the upside, I think the upside has to be adjusted, and some of the levels no longer work, and I think that this arrow should start from somewhere around here, in between this 1983-85 levels, approximately around here, guys. So if we do clear it, then yes, I will go higher. Let me just grab this highlighted zone. Oh, I captured an arrow as well. Let me just get rid of it. So if we do, yeah, push through this highlighted territory right here, then yes, I will consider some higher levels. At this point, this is neutral for me. Honestly, this could be just up and down. In general, of course, okay, don't get me wrong, it could still drift slowly to the upside while trading above this upside line, of course, taken from the low of the 3rd of November of last year. But the main interest for me would come if we do see a push above this territory between the 1983-85 levels, and then we'll kind of go from there. Silver, just a quick update on silver. This one's kind of stuck as well, but on the positive note, it's stuck above this territory, my barrier, the breakout barrier, which I've mentioned before. And look, that one, this barrier right here, is between the 23.52 and 57 levels. So, so far, so good. Yes, yesterday we tried to kind of stay below it, but failed. So now the question is, can we can we see a reverse, like a rebound from this territory, a rebound from this hurdle, which so far is doing a good job and acting as a good area of support. If we can, great. I'll aim for the 50-day EMA, and if that gets cleared, I'll aim for some higher levels. But if we start dropping again below this highlighted zone right here, I mean, I will consider a bit of a move lower. This broadening formation no longer needed. I think it's time, yeah, to get rid of this. So at this point, yes, if we do fall below this highlighted territory, I will consider a move back to the 200-day EMA. Oil. Oil is quite interesting. So, OPEC. As I mentioned in the heading there, the cartel members can't agree on output. Basically, Saudis said that, oh, we're going to cut like by 1 million barrels per day, you know, or we're going to cut our output by 1 million barrels per day. Countries like Russia, Nigeria, Angola said, no way, we're not going to do that. We're just going to continue pumping. So yeah, in a way, it is kind of, you can see that there's no agreement between the countries of the cartel countries. So at this point, you can see that yes, it drifted back down, and the reason why we're seeing, you know, although Saudis were saying, you know, that yes, we're going to cut, and I think that they were kind of, you know, hoping maybe to see oil jumping back up a little bit. But yeah, and like I said, Russia and Nigeria and Angola and some other ones will continue pumping, because basically they need oil. They need to kind of support their economies, and you know, that's their main driver. Yes, Saudi's economy is also, but Saudis so far are okay without, you know, pumping more oil. So look, after we broke the 74th territory right here, we moved higher. We tested the 100-day EMA and provided good resistance. So now, after that, then this is the Sunday candle. Basically, these are the futures. But then on Monday, we fell back down here, back below this hurdle, and we're now drifting lower. Now, this downside line, I talked about this previously, and I said that if we do clear the downside line, I will go towards that 74 territory. And if that gets cleared and we stay above it, then yes, further upside could be possible. We did move, but we failed to stay above this hurdle, above that 74 zone, and we're drifting now to the downside. This downside line has to go, no longer needed. Or actually, let me recycle it. Always recycle, guys. This upside line now can be something of an interest to us. Look, in general, what's my take on oil? You know, let's say medium to long term or something. I'm not very bullish on it. I'm not very bullish, and in a way, there could be some more downside, you know. And looking at the picture here, and me loving my or at least trying to see everywhere my rising wedges or falling wedges, I'm starting to see one here. And if that's the case, guys, well, this could, like I said, this could be an indication that some downside is coming. However, let's say this is a rising wedge. So until the sides of the wedge remain intact, in this particular scenario, the upside wedge, we could still move higher within the wedge. So don't exclude the upside scenario yet. I mean, but don't get way too comfortable with that one as well. However, with the downside, you cannot really get comfortable with the downside scenario just because we're still within the rising wedge, and we could still go higher. We need clearance of the lower side of the wedge, and then we could consider a move to the downside here. So, natural gas, just a quick update on natural gas, guys. We had a bit of a push back up, but still we are below this downside line. I talked about this on Friday, and I just wanted to run by you that in a way it's looking quite interesting, to be honest. And we're still below the downside line here, a few downside lines actually, and we are still above this little hurdle. this territory, the psychological two zone. So if we do get a nice good drop below, then yes, I will go to the downside right here, and then we will take it from there. Bitcoin, fantastic move here, lower, and we did fall below the 26,550 territory. I talked about this, if you remember, last week. So yeah, we fell below that hurdle. We also fell below the 100-day EMA, and I said that my next target is this, the 25,810 zone, approximately around here. Good result. Not only that, we also almost managed to reach my 200-day EMA. So now what's next? Well, I think next is this. I will keep an eye on the 200-day EMA together with the territory right here between the 25,250 and the 360 zone. If we do clear this 200-day EMA here as well, then yes, of course, further declines are possible. Elumalai, say gold. What do you mean, say gold? Gold. Or do you want me to review gold? Well, look, I just spoke about gold. This is the list that I go through every day. So I started off with indices, then I went into commodities, and now crypto, and then I'm going to jump into currencies. So look, once this video is finished, I need to continue with my reviews here with the instruments here. But once this video is finished, you can have a look at the replay. Yes, I mean, you can jump into gold here. And like I said, this is the list normally that I go through every morning. So you can check that, and also in the description of this video, you can also see the instruments that are going to be covered during the webinar. So apologies, but I'll have to continue. Sorry, with the instruments here, because I'm kind of running out of time, to be honest. Ethereum, guys, also fell nicely. Look, when I talked about this previously, I said to you, like, 1929, I need to see a break of that in order to go higher. We didn't get that, so yeah, we drifted back to the downside, and my downside scenario is from around here. And I said to you that if we do fall below that 1785 territory right here, then yes, I will get a little bit more excited with the downside. My next target is the 200-day EMA, but of course, before aiming for that, I need to see a drop below that 1785 territory. Now let's jump into Australian dollar pairs, and of course, the hike affordable. Can you break down BTC in smaller time frame? Look, I can very quickly. But normally I kind of don't. I mean, if you're intraday trading, then yes, of course, I understand your logic here. But in general, look, I'll jump into a 1 hour chart for example, all right? And what I'm seeing here, and it kind of goes in line with my idea of the daily. And to be honest, it kind of the same. You can apply my daily analysis on your your intraday analysis, because look, on a 1 hour chart, I'm seeing this right now, and what I'm seeing is a potential bearish flag. We have ourselves a little pole here. We have our little correction, and in a way, if I start, let's say, trying to apply Fibonacci's on this one as well, I can see that, okay, this is very biased. I mean, maybe from here it's better. So you can see that we're near that 23.6% retracement on the Fibonacci, which is drawn from the high of the 5th of June to the low of the yesterday, actually. So the same day, basically. Yes. So you can see that we had a 23.6% retracement right now. So maybe a bit of a hold up here could be possible, and we could slide back down. So again, that's why I tend to stick to my dailies, because again, those give me a much clearer picture, and a bigger picture where overall it could go. And during the day, I adjust. Let's say when I do my daily approach is kind of, yes, I do look at shorter time frames, but overall I look at the daily because in a way, look, the trend, let's say the direction currently is, it's understandable. We could go lower, and the hourly is kind of confirming me that. So, look, I don't know if I've answered your question, but that's sometimes the shorter time frame for me is a little bit too noisy, and that's why I try to kind of keep it calm, keep it careful, and not to go over, and that's why I stick to the dailies. Like I said, yeah, Ethereum. This I talked about that. AUDUSD. So far so good. I talked about AUDUSD last week. I said to you that, hey, if we do push above this hurdle right here, this 0.6564. I'll go higher. I'll aim for the 0.6605 or even the 50 and the 100-day EMA. My next target, if we do clear the 100-day EMA, my next target is the 200-day EMA together with this 0.6710 zone right here. And then, yeah, I'll take it from there. I have a bunch of other scenarios here, but lined up, but again, let's go, not rush into this. After we broke the downside line, and this is what I mentioned to you last week, I said that if we break the downside line and we climb above the 0.6564, I am going higher. Mission accomplished. A four wall, yes. Well, yeah. Thank you. But thank you very much for your question, honestly. Like, I don't know if anybody else had similar questions, but I hope that helps. But again, like I said, that's why I look at dailies. And especially, look, in here, for example, when you're looking at the currencies as well, it kind of clarifies a lot of stuff here. And look, I've had a beautiful break here of this downside line. We pushed above this barrier. We stayed above this barrier. And yes, and it kind of works well with my analysis because I said that if we break and stay above this 0.6564 territory, I will go higher. And well, it is working so far. So let's see if we can go further north. But for that, I need to see a break of this 100-day EMA here, shown as the green line. AUDNZD, just a quick update on that one. Okay, look, with this one, I have to admit, I was kind of hoping for a different scenario, but okay, I'll take that. Look at this. I mean, I talked about this little hurdle right here, this 1.0888. And I was kind of thinking that it's going to provide good resistance, and well, it provided good support instead. So we broke it, we stayed above it, and we continued to trade above it. And look at this, we pushed further north. In general, my target got reached, but not in the way I really wanted. Okay, I'll take that because look, we cleared, and this is one of the moments because we cleared this hurdle. And when I talked about this on Friday in the morning, we were still below this barrier, and that's why I was kind of leaning towards this. But then we had a fantastic move here to the upside. We clear this barrier, yes, and we continue to rally. So I think it's time to adjust. This needs to go. The arrow needs to be shifted a little bit. Look, as long as we stay above this 1.0931 territory, which is the highest point of April, then yes, I will consider a further upside. We're right now confirming a forthcoming higher high, and in a way, of course, this is kind of opening the door towards this level here, the highest point of February, or in other words, the current highest point of this year. Before going all the way there, of course, we have a bunch of obstacles on the way higher. For example, this one, the 1.1013, marked by the inside swing high, inside swing low of the 21st of February. So this is going to be my next target, as long as we stay above this 1.0931 territory right here. If we stay above it, yep, I'm leaning towards slightly higher levels. But for the downside, well, what I would like to see here for the downside is if we do somehow fall back below this 1.0931 and stay below it, I will go a little bit to the downside. AUDJPY, just a quick update. Okay, I'm loving the idea that I've talked about previously, about 2-3 weeks ago when I've drawn this rising channel, and so far it's good. So far it's okay. The only problem it's not working are some of the levels, and I have to admit that on this pair, unfortunately, not everything is working out for me as I wanted. But okay, look, it's part of the deal. We have to just adjust. After we cleared this barrier, this inside swing high, or this high of the 29th of May, well, now it's an inside swing high. Before it wasn't an inside swing high. It was just a lower high. So we cleared that 92 territory and we pushed higher. Then we cleared the 92.42 zone as well, and we pushed higher. We did see a decline a little bit yesterday, but yeah, it was just a little temporary correction, and now we're seeing a further push north. To be honest, as long as we stay above the 92.42 territory, I'll continue targeting the upside. My next target is the upper side of this rising channel, and then we will go from there. For the downside, in order for me to consider lower levels, I think a good option here could be to wait for a drop below the 92 territory, or a drop below the 92.14 zone right here. And then, yes, we could consider a move to the downside here towards the EMAs on my daily chart. AUDCAD, just a quick update on this one as well. So beautiful move here to the upside. I talked about this downside line before. I said that if we break above it, we could go higher. The only thing is that I haven't picked up on this for quite a while. So you can see by the shift here in, my arrows went back, behind the chart. So I think that, look, the fact that we broke the downside line, if you managed to capture that, great. We moved higher. We tested the 0.8944 territory right here. This is going to be the target that I'm going to be keeping a close eye on. If we clear it, I will go higher. For the downside, I would like to see, well, first of all, adjustments are needed. This downside line will have to become an upside line right now here. And if we do fall below it, yes, potentially this could attract more sellers into the game. Look, for now, long story short, for now, if we do fall below this territory, below that 0.8875 territory, somewhere around here, I will consider maybe a bit of a move lower. But at this point, we are just moving higher, and let's see if we can clear this 0.8944. USDJPY, so not exactly as I wish it to work, but okay, we'll take that. Look, I talked about this before, and I said to you that if we do push and stay above this 139.90 territory, I will go to the upside. We did move a little bit higher, but when we fell off the cliff. So look, and another thing that's working here is the idea that I've talked about previously, where I said to you that whenever we have like a big candle like that and then a smaller candle followed in the same direction, then there's some sort of a, well, I talked about a tail actually, when there's a tail, the body is smaller than the tail, then yes, we could see a reversal back to the downside here, but kind of, to be honest, it works whenever. It's like a 50-50 chance on that one. It's just like maybe I'm trying to see something where it's not. But anyway, how we can play this game here right now. First of all, I'll remove the Fibonacci's. I don't think that they're needed anymore. And I think that we'd rather stick to some levels instead. So one thing that I'm going to mark here is this upside line taken from the low of the 18th of May. Now, some of you might say, hey, maybe this is like a nice kind of head and shoulders pattern with a tilt, where the neckline has a tilt. That could be the case, of course, yes. And for that to happen, yes, a break of that neckline is needed. So, and the neckline is, so far, the neckline is this upside line. Now, will we get that? That's a good question. I think the only option right now for you is to wait. This level here, the 139.90, can go away. I don't think it's needed. This highlighted zone can go away as well. So I think the conservative approach here for the upside is to wait for a push up of the 140.92. However, you could already start looking at some higher levels if we do push above this 140.45 territory right here, the high of yesterday. If we do climb above it, great. We could aim for the highest point of May, near the 140.93, and then if that gets cleared, of course, yes, a forthcoming higher high will be confirmed. Now, in terms of the downside, a drop below this upside line and a drop below the 138.75 territory maybe could be just for that. It could be ideal for some downside scenario. USDCAD, just a quick update on that one. So yeah, we held below the 200-day EMA nicely. So what we're gonna do next here? Well, look, so far it's doing a good job here. It's falling below my 1.3415 territory, and if we're gonna stay below it, I will go further south. So yeah, that's the game plan. Let's see if we can get a further move lower here. As long as we stay below the 200-day EMA, I'm aiming lower. If we do start climbing back above it, maybe then yes, I'll consider a bit of a move higher towards these EMAs, the 50 and the 100-day EMA. USDCHF, so we broke the upside line because the 100-day EMA provided fantastic resistance. So what's next? Basically, it's just kind of telling us that, hey, this 100-day EMA is something to be watched, to watch for, and if we do clear it and we stay above it, then yes, I will go to the upside towards that 200-day EMA. But at the moment, I am considering the downside scenario, and yes, we're approaching my next target, the 50-day EMA. If that gets cleared, my next target is the 0.90 territory, the psychological 0.90 zone. GBPCHF, looking at the picture here, also drifted back down. So look, after we got held below this downside line here, taken from the high of the 31st of October of last year, the pair started moving lower and we fell below the 200-day EMA. I talked about this last week and I said to you that if we fall below the 200-day EMA right here, my next target is the 100 and the 50-day EMAs. I'm still targeting that. I want to see if we're going to get a little hold up here or not. If we do not, then yes, I will aim for this upside line, taken from the low of the 25th of April. So that's the game plan. But first, like I said, I'll aim for the 100 and the 50-day EMA. For the upside, well, actually a break of this downside line is required. And until then, I'm not really... So yeah, for now, like I said, that's the downside scenario, or sorry, that's the upside scenario for me. Only if we break the downside line, and then yes, we could go higher from there. A four-wall. I can see you there in the chat room. Private number. Unfortunately, no. Unfortunately, I cannot provide you with that. You can reach out to me. Through TradingView if you wish, through private message. But through TradingView. Then through sending a private message, maybe we can discuss it there. But sorry, I'm not giving out my private numbers. But anyway, thank you for your interest. I really appreciate for the kind words you mentioned there. So, but yeah, thank you. But anyway, coming back to the pairs here, GBPUSD. Look, for now, it's holding nicely above all of the EMAs. It's sitting above all the 50, the 100, and not to mention the 200 already, the EMA, but it's sitting currently nicely above the 50-day EMA. So as long as we stay above it, then yes, I will aim higher. I will continue targeting the upside, but is also as you can see, this 1.2547 territory is something that I'm keeping a close eye on, because together with the 1.2578 in general, I would say this way, I'm kind of still considering this to be as a good area of resistance, this territory between the 1.2547 and the 1.2578. So, and then if we do clear this territory, then yes, I will go further north. But at this point, I will go slowly to the upside. I will remain a little bit more on the positive side as long as we stay above the 50-day EMA. If we start falling below it, I will consider a move to the downside. Euro CHF, looking good, looking very, very interesting. And look at this, my favorite falling veg, my favorite veg patterns. Look, we did get a few false breakouts, but we failed to stay above the upper side of the falling veg, and well, that's no good, to be honest. We could see a kind of a breakout to the upside here at some point, because it is a falling veg. However, I need to see a stronger move above the upper side, and I would need to see the body of the daily candle staying above the upper side of the falling veg. So far, I'm considering the downside scenario because we fell back inside here, and look, we fell back below this upper side of the falling veg. We fell below the 0.9724 territory as well. And yes, my next target is the 0.9706, which got tested, and that now got cleared. So aiming for the 0.9677 territory, somewhere around here, around that line. And from here, we'll go further. We'll see what it wants to do after that. EURNZD. So far so good after we fell below the 23.6 here on the Fibonacci that I've drawn. Yes, I said to you that I'm going to aim for that 38.2. We reached that one. Great, perfect, actually. By the way, perfect hit. Just textbook perfect. So now what's next? Well, if you want to go further south, I think that a drop below that 38.2 would be needed. If we do fall below that 38.2, then my next target is the 50-day EMA. Of course, I have this highlighted zone right here, a highlighted zone within the highlighted zone. But then if we do clear all that, then yes, the next target is the 50% retracement on the Fibonacci. And finally, EURUSD, guys. Oh, by the way, in terms of the upside on the EURUSD, very conservative approach. I'm waiting for a push above this highlighted upper zone here, this area between the 1.7839 and 1.7852 levels, and then I'll go to the upside. Until then, I'm not really getting comfortable with the upside scenario. EURUSD, so this one's a mess. First of all, this upside line needs to go away. No longer is valid. It did its part. Now I think it's the little range that we're going to be sticking to. So again, it's not a perfect range. I think it's kind of stuck somewhere in between these levels. So the 1.0693 and the 1.0760. So look, if you want to consider the downside scenario, wait for a drop below that, because at the same time we would fall below the 200-day EMA and potentially more sellers could join in. If we do push above the 1.0760 territory right here, now that's where it could become a little bit more interesting for a few more buyers. As long as we're stuck in here, I'm just observing the price action, guys. I'm not really doing anything. So, okay, I'll have to wrap it up here, guys. Thank you very much. I'll need to jump off and make way to my colleagues. But yeah, thank you very much for tuning in, guys. Really appreciate all your comments. Really do. So, guys, thank you. If you want to reach out to me, you can do that privately. That's no problem. Either through, you can find me on TradingView, send me a message there, and if you have, I hope you'll. Well, if you have any questions in general, you can drop them in the message box there. I can try to pick up I can pick up on that in my next session. A forward about the EURNZD is moving up. No, not really. I mean, it's kind of it's stuck here. So it's kind of forming somewhat of a bullish flag. Again, but not a very ideal one, so that's why I cannot really call it as a bullish flag. So that's why I'm cautious right now with that one. But anyway, guys, I hope you found this session useful. Thank you very much for watching and listening. I really appreciate your views, your rockets, your comments, everything. So thank you for that. If you want to catch me tomorrow morning, as always, at a Daily Pitch International at 6 o'clock GMT time. Thank you very much, guys, and I'll see you tomorrow. Bye-bye. Hey there, thank you very much for watching this one till the end. I really appreciate that. So, like this video? We speculate your next mouse movement will be towards the subscribe button.